Okay, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The odds in France stay mainly in your pants. All right, so I got it streaming. Hang on, I got to pop the chat. 1 second. So while I'm doing this, why don't you post what currency pairs you would like me to cover? Your number one most concerns. Things like which dollar pair, which yen pair, which Swissy pair. Is it dollars? Or is it gold? Is it oil? Is it a cross pair? What's on your mind? Let's go through it together. Let's go. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money cannot afford to lose. Is the audio low today? Well, I think because I changed it yesterday, someone else said something. So I just jacked it up a whole bunch. Hopefully that's better. I got the mic closer to my mouth. Hopefully that's better. Cool. Hey, good morning. Nice to see you. My name is Wayne McDonald. I'm the Chief FX Market Strategist for Traders Way. I've been trading currencies since, I don't know, year 2000. That back then I was monkeying around with it. I was doing other things, but I had Forex on my mind. That's why I had to make the leap of faith. Hang on, where's my coffee? Look at this. I got an empty Rockstar, empty coffee mug, empty coffee mug, empty coffee mug. Which one? Oh, this one. Must be a Friday, huh? Must be a Friday. Oh, the Minions got it good today. Thank you, Minions. I'll let you live another day. Now get back under the stairs. All right, cool. So anyways, I've been trading currencies a long time, and I'm here to share. I preach to teach, because some of you never had this. And what are we trying to learn here? We are trying to learn how to plan trades, not for today. Today should already be done. How about next week? Let's say, how about plan our trades for Monday, plan our trades all next week, that kind of stuff. We're always looking to the future. We're not looking in the past. You want the past, go use a bunch of lagging indicators and pray to God MACD tells you what to do. And if that doesn't work, maybe stochastics will make you rich. And if that doesn't work, tell me what to do, Mr. Elliott Wave, Mr. Wave. Tell me what to do, right? No. You're the expert. You're the hero that people are turning to. Therefore, you're the ones with answers. So what's the market going to do in 2020? What's the market going to do in February? How are we going to end out January? All these things come to you. And then we use technical analysis to confirm or deny your opinions. That's what we do. And I'll teach you how to do it. Plan and trade the future, not the past. So the way to learn is to get involved, ask questions. Make sure you subscribe and like to the Forex.Today YouTube channel. Please leave comments on the videos. Really, I highly suggest that every single day on the videos you document what you learned. Leave a note to yourself. Don't worry about saying, Wayne, this is the greatest thing in the world, and I get a lot of that. Thank you. But I think you should document to yourself, what did you learn today? Imagine taking notes at a university level class. Is that a necessary thing to do? Yeah, probably. So leave a trail of crumbs to your kingdom of joy. In case you get lost in the woods, I don't know. And then once it all starts coming together and you're developing skills and confidence and you're ready to trade real money in the foreign exchange market, please open an account at tradersway.com and start trading there. Why? Because they're bringing these webinars to your life. Thank you very much, Traders Way, for sponsoring the channel. The Forex Palace. Yeah. Cool. So, Did you post what currency you want me to cover? No. I guess maybe you didn't hear me. Please type in the most burning currency pair you want me to cover first. What's the biggest thing on your mind right now? And I'll try to cover them today. Yen pairs, dollar pairs, Swissy pairs, crosses, gold, oil. I'll try to get them all in today, whatever you want. Bitcoin, don't forget Bitcoin. I got to reorganize some of these things, but yesterday I taught you how to build these templates. Here's our BTC. No, don't say yen and Swissy. Jean-Guy, tell me which pair. XRP, maybe. We'll see if we'll see if I'm in the mood today. I woke up grumpy today, probably leftover from yesterday's missed trades. And anyways, I feel so much better just hanging with you guys right off the bat. That's a sincere note. That's sincere. So thank you for being here today. I already feel a lot better. I was pretty grumpy just like 20 minutes ago. All right, so we got a bunch, pound Aussie and stuff, and euro anything, and all that kind of stuff, and yen pairs, and palladium. I don't know nothing about palladium, Emil, but it's interesting. Pound dollar, okay. All right. Don't want me grumpy today. Well, I'm never grumpy at you. Jean-Guy is a true gentleman. All right. All right. Yeah, Prince says Euro Lira ready to take another sell shot. Well, it's not me who's needs to be ready. It's the market, right? So, anyways, so let's get off this. You know what? No, I don't want to start here. I want to start on all yen pairs. All yen pairs. There we go. I look cool today? Right on, man. Thank you. See? Love that stuff. Thank you, John. As an only child, I love that kind of stuff. All right, cool. Check this out. Chickadee, chickadee, make it. Look at that. So one of the things that we've been discussing lately is, will a reversal be born? Right? Huh. Whale oil be. Whale oil be. Let's get that out of the way. Whale oil be. MR fish. Let's kind of get that. I hope that the sound should be good down with the mic down there. Coolio, right? That's going to be interesting. So we discussed this yesterday as we're going up. I'm like, wouldn't it be interesting if we did this and you already happen to be a bear? Could be interesting, right? The swing trading group and I talked a lot yesterday about what constitutes a false rally. Why does it happen? Where does it begin and where does it end? It was a good meeting, I thought. Only went 2 hours. Could have been easier on you, glycerine. All right, check that out. Another kind of interesting play. But you notice it's a move across the board so far, right? We have now 2 moves this way off the top. What's up, Brooke? I've been good, man. How about yourself? What do you think about something like that? Well, again, this is something that I've had planned for a while. right? This is something I've had planned for a while, so it's interesting that it seems to be happening. Right at the London Open, right at our prices, right at the, right at the place you'd expect. So that's 2 out of many yen pairs. How about Kitty Cat? Cat's been strong on oil. Oh, it's kind of doing the same thing. Let's change the template here. Could have been easier on you, glycerine. Okay, not exactly the reversal zone, but I don't know. If I was going to talk myself into something, at least I'd say it's resistance, right? R1. But anyways, this is much more bullish than some of the other ones, right? This is still a setup for this, technically. So you got to walk away from that, okay? So that's more bullish than the other one. So if I'm looking to be a bear, I'm not going to like that at all, okay? This one, okay? The plan was maybe it heads up into this zone and then down and then up and down. And so that's again, the beginning move, similar to what we saw on the pound yen and the euro yen. This is Kiwi yen setting up for something similar. Once again, we've had this planned for weeks, so I don't know what it's going to do next week, right? You have to remind yourself, I don't know this. I don't know anything, okay? It could do this next week, still do something like this next week, and have nothing to do with what I have planned now. But it's nice that right off that zone, we got a very aggressive downside move. And so my next move would be something like that if I was using price action. Yeah, guys, if you want to be here before it starts, I believe if you just go to youtube.com/Forex.Today, one word, /live, I think that always uses that as the stream page. I might be wrong. I've never actually logged in my own webinar, but you know what I'm talking about? Okay. Okay, that's if we break out to the upside next week. And you'll know that because we'll break out. Right? So you got to look left. Up, 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 down, down, buy, up, 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 down, down, buy, up, up, up. This is probably how it would work. And again, it's just simple price action. Okay? So if I zoom in closer now, you'll see what's happening. Oops. What's happening now is just another part of price action. Okay, where this is still sort of a buy zone. Okay, this is only a 50% retracement, right? So we're right in the sweet spot. Now, typically, price action kicks off here. It doesn't have to be. It doesn't have to be. It's just like a suggestion. It's like a basic guide. But anywhere between the 618 and 382 is legit if you're a bull. So if you're a bull, you can still say, oh, man, we're going to make a higher high here. Okay? Because what's happened, what I'm trying to communicate, is what's happened overnight to someone that has anything more than a 5-minute chart open, right? What's happened last night is just a standard operating procedure for a bull. Okay? It's only meaningful to me because we said a couple of weeks ago, and in fact we said a couple of months ago, that January would look like this, okay? But the second wing here is a false rally. So we're just in the very beginning, like we're just sort of here. Is it going to come down? We're just sort of at the tip of this inverted iceberg, so to speak. We're right here, right? So is this going to fall for a week or two? I don't know. I really don't know. Okay? That's what this part represents here, is just the tip. So if I'm a bear, I'm going to do the reverse of this. Not like the opposite, but I'm going to set up price action the other way. So it's not the opposite, right? What I'm suggesting is you would use price action. Actually, let me do it this way. You would use price action here to be your guide down. And you wouldn't be doing this on an hourly chart. You'd be doing this on a 5-minute chart. But the price action would look like this. Okay? That's what we got now. Therefore, you have permission to engage. Roger that. Thank you, Overlord. Okay? And you go, Does that make sense? And this would be exactly the same how I would treat Euro Yen, exactly the same how I would trade Pound Yen, that kind of thing. Okay? Well, Pro Trader is like, I'm not looking at it from this point of view. Okay? I'm looking at it as a double top of a double top. Okay? I'm looking at it from this point of view. Okay? And the interesting thing is, way back in October, we talked about this move here. Way back in November, we talked about this move here. In December, I took profit in this zone and just let it fizzle out. And meanwhile, talking about, I believe this is going to set up, that there's going to be a dramatic drop in January, a false rally in January, and then we'll see. Okay, but a false rally generally means no higher high. Okay, so I'm not focused here. This is where amateurs are focused on, right? I'm focused on sort of this kind of action, maybe. Okay, I'm not predicting it, but I'm not ready for the higher high until it gives me the higher high, and then I'll completely adjust. Okay, so another way of looking at it, to be little, I don't know, solid, that's not the right word. You cannot buy it here. I don't care how bullish you are, you'd be an idiot. Okay, so I might as well then look for the downside opportunity, because it might just be small. Maybe I make money today, but maybe I make money all next week. Maybe I make money all next month. I don't know where the market wants to go. You understand? I don't know. I don't know. I don't know. But I can tell you, buying up here is stupid. Or let's say not stupid, foolish. Okay? So I might make nothing here, or I might make something here as a bear. And how much I make has nothing to do with me, because the only thing I'm in control of is that under the right technical analysis, I want to be short here. So will it work for a day? I don't know. A week? I don't know. A month? I don't know. I got other technical indicators that can help me make these decisions, but at the end of the day, I don't know. Ted says, but it won't make a higher high. I'm telling you, Ted, I don't know if it will, but to add new money to the old money as a bull, at that price, you clearly, not you, but whoever's doing it clearly doesn't know what they're doing. To wait for it to come, let's say, all the way up into here and then buy, they don't get it. They're just not on the clue train and not likely to be a professional. Okay, professionals bought down here. And professionals bought down here. Amateurs and dentists and lawyers and accountants, all these smarty pants, bean counters, that's where they buy up there. Right? Your rich neighbor that brags about all the winning stock trades he does, but doesn't tell you about any of the losing ones. That's one of his losing ones. Does anybody have a person like that in their life where they see you and they instantly want to talk about their stock trades or something like that? They're like, oh, what's up, buddy, bro? I bought Schlumberger. Boom. Flipped it for like $14. Right? But they're all right. Really? You guys got many? Huh. You're lucky. Seriously, I think you're lucky. I don't talk about the markets with anybody. Um, my friends believe I'm smart. So if they have a problem, I'm usually a confidant, which is cool. I like that. Because at least I have an opinion, right? Anyways. Many people in your town, is that right, Dan? That's interesting, right? I'm not going to make any more Kanye West comments, but uh, has anyone read Kevin Hart's book on finance? I probably should be reading it right now. Maybe I'll order it right now. I'm still busy, even though I'm not doing anything. Um, so he's from the hood, for lack of a better word. I haven't read the book, but I heard about it in the interview. And he says where he comes from, there's no concept of finance. There's barely concepts of right and wrong. It's just get what's yours, right? And then all of a sudden, credit cards start getting sent to the apartment buildings where he grew up in. I don't know where he grew up. I'll just say, rough part of Philly or something. And he said like, everyone around him had no concept of what it was. It was just a way to get what's yours. And if they're going to send you a credit card, you're going to take it out, you're going to jack it up, and you have no intent to pay for it. And there's no idea like if you got money, you don't put it in a bank. You don't have a bank account. And there's no idea like you should save for retirement. You should invest your money and get high returns. If you get a paycheck in your hand, you spend it. You spend it, right? So, anyways, that's what he was talking about his neighborhood. So don't start calling me a racist like when I. What did I do? I sang a Kanye West lyric, and all of a sudden I got hate mail, and you're a racist and you're a scumbag. I'm like, whoa, man. So, anyways, people don't like Kanye. Great. Kevin Hart seems to be all right. I don't know anything about Kevin Hart. But he is pretty funny from time to time. And apparently he wrote a book because suddenly he was making millions and millions and millions of dollars. And he was smart enough, right? He was smart enough to educate himself because he was making millions and he realized everyone around him was a little more in tune with this money. And he's like, well, I don't want to be taken advantage of. So anyway, he wrote a book for people from neighborhoods that have no concept of money, whatever neighborhood that is. So that's kind of how he explained it, where he talks about proper use of credit cards, having a bank account, why it's important, how to save, the power of saving, the power of compound interest and stuff like that. But from his, neighborhood. What, again, I don't want to put race on it, but it's completely toward race. A particular race. I'm not saying which one. But Kevin Hart wrote the book. Anyways, so he's a comedian, but he's like, I'm making millions of dollars and I got mansions and stuff, but he had to educate himself, right? So I think it'd be a great book to read. You don't like ni hao ma? What's wrong with that? It means what's up. Okay. Anyways, so that might be an interesting read. Hey, maybe it goes into the book club, right, Max? All right. Swissy. You know what? Two of my friends now have done TED Talks, and I'm like, oh my God, I got to do a TED Talk or something. I brought up. I took a public speaking class at Harvard. Yeah, I learned so much. But they, I said to the professor, who's a really awesome lady, and I said to her, you know what? You need to do an advanced public speaking class specifically on doing TED Talks. And anyways. Hey, and I don't know what you mean by Gulliver, by the way. Raymond Cook says, I saw Kevin Hart's documentary on Netflix. It was really good. Yeah, but no one's read the book, huh? I might look at it. Yeah, especially Gary says it's hard to associate me with being a racist. Well, I've spent 20 years in a nonprofit organization dedicated to, learning from other people's cultures and growing as as a human race. But other than that, I am clearly an elitist, though. Okay, I'm clearly an elitist, but I'm not a racist. So I'm actually taking a class coming up in like 2 weeks. I'm starting one on diversity and inclusion, and I found it really interesting because I have to take this class as a management degree, right? Right? And being an entrepreneur, it's just like straight out of the gate. An entrepreneur will always hire whoever's the best to get the job done most effectively. That's what entrepreneurs are. They want the path of least resistance. They want and demand results and success and hitting the goals of the business plan. Like, only a giant company with stupid resources or whatever really would have any sort of racist connotation that I would know of. But a small company, here's how a small company works. And this is why I love startups. This is why I always quit companies when they get to be above more than 300 people. Right? Okay? And a startup says, dude, can you do this? And they're like, yeah, I'm an expert at doing this. I've been doing this for years. I'm really, really good at it. Good, you're hired. Do this. So a woman that worked for me, she was the number 3 employee at Netscape. Do you guys remember Netscape? It was Andreessen. It was, why can't I? Clark, Jim Clark. It was Jim Clark, Mark Andreessen, and then they have been sending not even CDs, floppy disks to college students to get to get some feedback. It wasn't even a proper beta test. And then they were talking to a buddy of theirs, and they're like, "Hey, man, we really need some help. We're really stressed. We're setting this stuff up." And their buddy said, "Oh, well, I know an awesome woman who kicks ass. You gotta talk to her." So, anyways, she gets a message, and by the way, this is so long ago, and she's riding a bike through Los Altos in her full spandex outfit, and she's got her cell phone. Like, this is before you even heard of a cell phone. So it just shows you how techie the Silicon Valley can be. Anyway, so she gets this message, hey, Jim needs some help over at the startup, and it's not far. Hey, and she's like, oh, well, I'll just ride my bicycle. So she rides up and meets with Jim Clark. And if you don't know Jim Clark, you don't know the Silicon Valley. But anyway, so he's now, his legend is so big, he's more of a myth. Anyways, so she's standing there in her what do you call them, the biking shoes, spandex outfit, holding her helmet, sucking down water. And they're like, yeah, so we got this thing. It's called, it's software you put on your computer, and it allows you to see pictures on the internet. And she's like, okay, cool. Who's using it? And they're like, well, we've sent it out to like 10,000 college students because they're the only ones with internet access. And she said, well, are you doing proper beta testing? Are you asking for feedback? Excuse me. Are you getting surveys from them? And they're like, no, we're not. No, we're not. And she said, well, you should really be gathering this data. And she said, so are you doing this? And they're like, can you do that for us? She said, yeah, boom. They hired her, number 3 employee. So when I hired her, I asked her about it, and she said that about a year later, Jim Clark needed the IPO, not a couple of years later, Jim needed an IPO of the company because he was building a $150 million sloop, the most modern sloop of all time. One person can sail a boat that needs like 8 people to sail it. He could do it himself by using just computers. And he needed $125 million more to pay for his boat. So he's like, oh man, let's just IPO this Netscape thing. So anyways, he sits down with her and says, most people in this situation are going to fall into drugs, or they're going to lose their money in other ways. So what he told her to do is like, buy yourself a car, buy yourself a decent place to live. Do the same for your mom. Buy her a car, buy her a decent place to live. But you're going to be a multi-millionaire. And he's like, you're going to lose all of it before the age of 40. Or if you take my advice, you buy all these things I just told you to do, right? But just enough. Buy a car, buy a house. Do the same for your parents. Great. Take the other $50 million or whatever the IPO is worth, right? Put it into an account, basically like a trust, and lock it up so you cannot withdraw any money until you're 40. And she's like 23 or something, right? And she did. And the advice was, so the money doesn't ruin you, and that you stay interested in life and you stay interested in your career because you're still hungry to improve, right? And so anyways, I hired her and she worked for me. It was really interesting. And she ended up getting her $50 million. She married a dentist. He quit his practice. She quit the job with me. They moved to Northern California up in the redwoods, and I think they grow pot and smoke it. So it's a complete waste. It's a killjoy end of the story, but to me, that's a total waste. No, I don't, but I will teach you how to trade for yourself. Just come here every day, super free as free can be. Well, the interesting thing is she said most of the friends from Netscape, they bought like 6 houses all over the world. Others became drug addicts, and others thought they were brilliant because they happened to be doing a job at Netscape and became bajillionaires. And so they all invested into, they all became venture capitalists and angel investors, and they just threw millions of dollars at companies like dogfood.com and all this crap. And about 8 years later, they're dead broke. Okay. Max, do you have a problem? I'm reading your messages the last few days again backwards. So I don't know if I'm reading your messages wrong, but I'm getting irritated. If I'm reading them wrong, I apologize. All right. Here's the resistance. Here's our zones. So what do we look for now? Around? Hey, thank you, Benjamin. You too. Okay. This is how a bear is going to look at it, guys. I think it's a dangerous place to buy if you're a bull. Okay. Now, yen is right. Yens are coming down, remember? So this will be very interesting. Typically, Swissy and yen are doing the same thing. Banda just went through the World Bank global prospects for 2020. Yeah. That's cool, Banda. That's the right thing to be doing. Thank you, Javamia. I don't understand the question. How do you open up a 1 or 2 day position? You click the button, dude. And then don't exit for 24 to 48 hours. Why are they up and down? I don't know. That bothers you, bro? All right. Okay. I think what I was showing is we need the up before the down. And now we've gotten it. Some people think because it's broken out, it's going to fall forever. So let me make a comment here. There was a time, and I don't know if it's still true, but many years ago, let's say a decade ago, I talked to a lot of amateur traders that were taught to wait for 3 candles to close outside of the range, and then you sell. And that the 3 candles confirm the breakout. Right? Lots of traders had this built into them before they showed up to FX Bootcamp, and I had to break that. So I believe when you get a breakout, the first thing you should always wait for is the return to the scene of the crime. Okay? And if you watch YouTube videos from 2005, 2006, you're hearing the same language. And then even when you listen to David Pegler's stuff, I hear it from time to time in his videos where he also says return to the scene of the crime because I taught him how to trade, right? In the breakout, if you're a bear, you don't sell down here. You sell up here. Okay, that's how you trade the breakout. And breakout selling occurs here. Okay. So once you're outside the breakout, you have to expect the up. The down creates the up. And so that's what you're probably looking at, Max. I had these green because on a smaller time frame than the 4 hour, you need to drive it up so that you can sell it down. Brinsley also heard that. Okay, some guys are still hearing that. It's the dumbest thing I've ever seen in trading. And some idiot must have written a book at some point. Right? But it was a lot of people at one point. There was a time, maybe it was more like 2006, 2007. I think it was even earlier than that. But anyways, it was just common sense. People knew this. It was factual. But of course, it has never worked. It's never worked because I didn't read someone else's book to learn how to trade. I taught myself how to trade. So I'm looking at, I hear that advice that people are getting, and I look at them like, that's weird because I've never once observed that to work. Never. And it's right here, like this breakout, right? If you sold down here, you got crushed. So anyways, do you sell blindly right here? No. So this is strategic. So what I just drew here is strategic. Now drop into a 5-minute or a 15-minute and be tactical about your sell. Do you sell now? No. Okay. So there are ways to do this now. When would you sell? Well, what if it did this? What would you do next? Would you sell the lower high, lower low? Yeah, I would. Yeah, that's what I'd do, faux show. I'd say, give it to me, baby. Right? But anyways. Benda, I'm more neutral right now, but on the longer run, I do believe it's risk on. Okay? So, like, what did we learn from Chinese GDP last night? It came out at 6%. It's all right. We're in we were in a trend that looked like this for Chinese GDP. We were in a downtrend, and now we're trying to stabilize it at 6. Lots of people think it's being manipulated, and it's really like 5.5. But they want to keep it above the 5 handle, so they're keeping it above 6. But the truth is, we really don't have any other measure, anyways. But with stimulus, and I believe further cuts of the reserve requirements in 2020, I believe they will stabilize. The United States has gotten through the trade war, so that'll go up, okay? And then maybe we can slowly get Europe online, or maybe we can get Australia and New Zealand back online or something. So if you want to be risk on in 2020, it makes a lot of sense to me. Oh, is that right, Miguel? So they're still teaching that same rule, huh? Okay. The interesting thing, guys, is there's like 2 schools of thought, right? If you're in an uptrend, I teach you how to anticipate the next down, 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 right? And I give you tools to say, well, this might be an interesting place to buy. That's price action. And that I want you to now buy something like this, right? So my school of thought, and it's always been this way, and I can tell you how I learned it if you want, but that you should buy here, recognizing this is an uptrend. And trends will last forever and ever and ever until the end. But I never predict ends of trends. They just go forever. Okay? So that's my school of thought. Now, the other school of thought, which you are being taught or have been taught by these other, whoever's teaching this crap, they're telling you don't buy until you break above here. And you should wait a couple of candles just to confirm that you truly have broken out, that it's a true breakout and not a fake out, and you're in the trend forever. Here's my problem with this. That means you're buying just as it's about to fall. It means you're buying just as it's about to fall. It means you're buying just before it starts to fall. And then you buy it here, and of course what it does is, yeah. Okay? Now, let's add to this. 80% of all stops in the market right this second are 30 pips away from price. Not that they're 30 pips, they're 30 pips away. Now, what percentage of amateur retail Forex traders have stop losses less than 30 pips? 90? 80? How about another 80? Okay? So my point is, what people are being taught is that they, I need yet another color. They're taught to buy here. Their stops are 30 pips or closer, so 20 pips, 15 pips. And this downward move knocks them out for a loss. Meanwhile, I'm buying the next wave. As soon as the traders lose their 30 pips, what am I doing? I'm taking over the same position. I'm buying it from them. But I'm getting a good deal, and they've just lost money, right? And now I'm up. And once again, then they do this. They're like, okay, it's broken out, great. And now we got to wait a couple of candles. Okay, great. So now this time I know for sure up here it's definitely bullish. And then, of course, we know it does this. Has anyone actually received this knowledge about confirming breakouts before you trade and then traded it and then have confirmed 100 times over that it never works? Does anyone sort of join my camp where that just does not work. And I mean, you've tested it. You learned the hard way, school of hard knocks. So I'm amazed it's still taught, actually. It's dangerous, right? So I can tell you the reason I taught myself to buy the dip instead of the breakout is I cannot stand the breakout. I found early in my days, every time I bought, it would drop 30 pips, let's say. And sometimes it would take an hour and a half for it to kind of fizzle down, and then it would take off, and then it would come all the way back down to break even for another hour and a half, and then it would take off. And it took me so long, and I realized, well, right? If it drops 30, then goes up 15, drops 30, goes up 15. Well, what if I just bought it after it dropped 30, and then it goes up 15 higher than the, we'll call it the water line? And then I'm like, oh my God, every trade is worth 45 pips, not negative 30. By just doing not the opposite, doing something different. And from this was born a couple of things, or probably more than a couple of things. But the idea of MAP, minimal acceptable performance, came from that. Right, this idea of drop 30 and then go up 45, which is 30 plus the 15, and then down and then up. And then maybe even some of my like 5-8 cross stuff might have been born in here, because you'd get a 5-8 cross pretty early in the up move, and then you get a 5-8 cross pretty high in the down move, and then here and then here. So I ended up starting basically I wouldn't call it scalping, but this was more like session trading, intraday trading, where I'd buy here and I'd exit here and I'd buy here and I'd exit here and I'd buy here, and then eventually I'd make a lower low. So this one's a loss and this was out, and I'd ended up with one winner. Okay, so I'd do that for years, and then I got better to like, how could I avoid this one? This last trade is losing money and knocking this out. So by understanding technical analysis better, I could avoid the mediocre trade at the top and just have two winners instead of one winner, one break even, one loser. So I ended up getting better at technical analysis, just to go from one winner to two winners and avoiding the third trade. Then I thought, wow, this could get interesting, right? And then, of course, these little things I'm telling you about took me like 2 years of like careful study. Imagine knowing nothing about everything. I knew nothing about everything about trading. So it was all pure observational, very, very, very slow. Like water over stone. I learned how to trade. Eventually, I wore the stone down. Joe says, I don't do MAP anymore. Of course I do. Of course I do. For example, here's the general idea of MAP. Okay? Let's say I get a situation where resistance is here and the move is like this. Do I buy it? No. Because minimal acceptable performance dictates that I have to make at least a certain amount, or let's say the trade is worth as least. I guess maybe what might have changed over the last 15, 20 years is the idea of locking in the MAP, and that's probably what you're talking about. My intraday trading, especially while I'm in school too, guys, right? Like when I'm in school, I intraday trade a lot less, almost none. I can't say none, but only one a day, for example, not 10 a day. That's just because I'm in school and doing a bunch of other things, right? So in that case, I'm not looking on any trade to make 45 pips. That's embarrassing. Okay? So when you're intraday trading, your trade has to be worth at least 145 pips. Worth, meaning if you buy where you want to buy and the next level of resistance is here, that's got to be a minimum 45. Because, you know, as you go along, you're probably going to have a couple of moves and it could collapse on you. But you got to be 100% certain on that trade that it's worth 45, and you would be very disappointed if you only got 15 pips, but you're managing the risk by, right, when it makes a higher high, you move your stop here. And then it makes another higher high, you move your stop here. And then it makes a lower low, and you're knocked out. And this has got to be worth, seriously, it's got to be worth more than 15. Otherwise, it's not even worth your risk. Okay? So it's sort of a qualification process, Joe, right? Okay. But you're right in the sense that the vast majority of my trades are either -3 or plus 178, right? Yeah. Or, right? I don't even break even. I don't even like break evens. I like -3. Well, no. So, like a day trade is basically equal your average daily range, right? So if I'm making one trade of the day on Great British Pound versus Japanese yen, right? Then it's going to be worth at least 100 pips, probably more. But if I'm in it for a week, it's probably worth 200. If I'm in it for a month, it's worth 500. So it's really this combination here of 100 pip trades, 300, and then 300 plus. Like sometimes, depending on the time of year, the swing trading group, I think it was the first week of September, I think like 5 people made over 1,000 pips that week. One guy made thousands and thousands and thousands of pips himself that one week. Yeah, it was a good week. And now he's a professional trader. There you go. Licensed and registered. So the issue really isn't pips, though. It's time. 1 day, 5 days, 30 days. Yeah, Jim, it was up there. Yeah, so one guy in the swing trading group made 7,000 pips, whatever it was, but it was certainly 7,000 in that neighborhood in a week. Yeah. And he's going pro, licensed, registered, working as a professional in the markets, on his way. Okay, so it's just, anyways, that's a form of swing trading, guys. That's all it is. Swing.fxbootcamp.com. All right, let's take a look. The Kiwi, this goes back, and Max will appreciate this. This idea that it's got to go up if it's going to go down. The interesting parts to this piece here is that this is a monthly entry and this is the monthly exit. And really, the month of January, according to GARP, is over. Right? So it's really over. What happens next? Well, I don't know. So this begs the next question. Would you sell here? Well, if that's the case, you're a bear. Do you believe that's over and done with? Are you risk on? If so, you can't buy up high, so you need the dip. So you actually need the bears to sell off the top. Okay? So one day you will have an epiphany, guys. I don't know when it's going to happen. Javier says there exists a license. Yeah, so he's becoming a commodity trading advisor. So you have to get licensed and registered with the NFA and then pass the Series 3 exam. And then you become a CTA. Yes. That means you can manage and advise clients on how to speculate in the futures and Forex market, right, in the United States. Okay. Remember I was telling you I think it's unfair. I looked up the CTA expenses. Okay. If you're a CTA and you help your clients buy and sell a Forex future or an S&P 500 future or oil futures, what's the annual fee? Just the annual fee. We're not talking about all the other requirements, and there are many. What is the annual fee for a licensed and registered firm? Jeez, I keep clicking blue and it won't go blue. There you go. Registered as a commodities trading advisory firm, and they advise their clients on futures. By the way, this is all done by the National Futures Association. I had forgotten about all the things that irked me when I worked with them. Okay? Okay? $750. Okay? It's not bad. Now, if you're an associated person with the firm, you also have to pay money. But that's what the firm pays. Okay? Makes sense. Now, what if you trade Forex, over-the-counter Forex? You also have to register with the National Futures Association. You also register as a CTA, so you get the same designation. The only difference is instead of trading futures, you trade Forex. What's the fee? What should the fee be? In my opinion, it should be $750. Would you agree with that? Every futures firm pays $750. It's the same regulatory agency. You're probably trading the same platform, right? MT4, whether it's a futures contract or spot, right? I looked this up yesterday. $2,500 if you're a Forex firm at the National Futures Association. I forgot about that crap. That just pisses me off. And I'm like, that's why I don't do that. Like, that's BS. Oh, well, it's so much more difficult to regulate you as a Forex person. Like, get out of here. Gee whiz, huh? Like, stuff like that. I walked out on the president of the National Futures Association when he literally said, oh, that's just spot Forex. It doesn't count. I'm like, dude, you regulate my industry and you just snubbed it. I got up and I walked out. I've had flown to Chicago. I'm in the middle of a room with CTAs, having lunch, listening to the person who regulates my industry. I got up and I left in the middle of his, after asking him a question, stood up. My name is Wayne McDonald. I'm a currency trader. You just said, under your guidance at the NFA, no one has ever lost money. I'm like, well, Refco went out of business. I know tons of people, when that firm went out of business, lost their savings, and it wasn't even their fault. The firm went out of business. The firm you're regulating, the one you're supposed to be in charge to make sure they're legit, they went out of business, and all the Forex guys lost money. And he's like, that's just Forex. It doesn't count. Like, you said what to my face? Anyway, so I got up and I left. Walked out. Just like, I grabbed my crap and I walked out. Everyone in the room saw me. I asked him a direct question. He answered it. I grabbed my crap and I walked out. Amazing, right? Like, oh. So anyways, what are this? This is a linear regression. Okay. It's very, very easy. You can do the math. You calculate the average price, what we call the mean, and then you calculate the, right? They're not outliers, but the standard deviation above the mean and the standard deviation below the mean, and you get this. Okay? So this is the average price, and this is when it walks below the average price, it tends to walk about there. When it walks above, meaning when it's bullish, it tends to be higher up in here, or at least what it's saying is the equidistance from this to this is this to this. So it dips farther down than it dips up. So it's what it's telling you. There's another way of doing this. Y equals mx plus b. Is that right, guys? Anyone want to check the math? That's the slope, right? So what it's doing is the slope, mx plus b. Anyways, what it's trying to tell you is this is probably closer to the bullish standard deviation, which is, I'll just make up a number, 30 pips, right? And then the bearish one is more like 80 pips. And then I forget how to do it. But anyways, you calculate it and it gets you a slope of the mean. Is that right? Well, Mark, it's more than a channel. It's doing more than that. Okay? So again, you step one, calculate the mean. Step two, calculate the standard deviation of the mean. Right? And step three, calculate the slope of the mean. Is what it's doing. And the slope is equal to, the slope is y equals mx plus b. Okay? And if you need more, Google it. Or take a class like I did. So in my class, they would show you a chart with all these data points on it, and they would ask you a whole bunch of questions about it. And of course, you'd have to calculate the standard deviation by hand, stuff like that. Fun. Fun. I'm not that kind of guy, so it was. I got an A. That's all that matters. That's all that matters. It was tough class. So we're waiting here. Oh, hey, thank you for subscribing. Benda says, let this serve you to know that you have amazingly changed my trading. You're an amazing, may you be awarded the best in life. Thank you. I appreciate that blessing. Thank you, Benda. Benda, what part of the world do you live in? By the way, guys, I mentioned to my wife about my idea about going to South Africa, Turkey, and Mexico to do exotics training? And she said, yeah, that sounds like a, because I told her, like, I'll do the same training in all countries, but when I get back, we'll have it edited. So if there's 3 parts, I'll do I'll take I'll make the best arrangement of the 3 and make a course out of it. So, like, for example, Ben, I'd love to see you when I'm in South Africa, because if I do this, I would do the whole course in South Africa, and then I would fly to Turkey. I'd do the whole course in Turkey. And then I'd fly to Mexico. I'd do the whole course in Mexico. And then when we get back, so everyone that attends live has the training. Then when I get back, I'll pay someone to organize and take the best parts of them. So can you imagine, like, I'm in Turkey doing training on the Turkish lira, or I'm in South Africa doing training about the South African rand, right? And all that kind of stuff. Wouldn't that just be epic? And then all of a sudden I'm like, hey, my name is Wayne McDonald. I'm a currency trader. And I'm in old Mexico. Hey, 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 hey. Today we're going to do Mexican peso. I'm going to show you how to do it, why it works, when to trade it, la da 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 da. It's not fundamental. It's not technical. It's flow, baby, right? And do the training. And I'm in Mexico, right? And of course, we rock it. So it'd be fun. Anyways, that's my thought. Yeah, Raymond, just email me. You know my email, right? If you emailed me before, I'm sure of it. Wayne@fxbootcamp.com. Yeah. Is anyone here living in Mexico right now? I would like to, if I had to choose, I would like to go to Puebla. I'd like to do it in Puebla. It's good. I don't know anything about Puebla except I want to go to Puebla. But I'm open-minded though too. Mexico is dangerous. Turkey's dangerous. South Africa is dangerous. Danger is my middle name. All right. Life is dangerous. Hiding in your house is dangerous. All right. So anyways, I think we got a bunch of Swissies done. Any other requests? Oh, we got to do golden oil. And if you got any other requests, and I know you do, I don't think I did euro dollar. Everyone's getting all mad at euro dollar. Remember, I'm not trying to tell you what to do or even confirm or deny your own trade plans. So if like for example, the other day I covered like euro yen and euro something else, and then someone got mad. They're like, you didn't cover euro dollar. I'm like, I covered all the pieces. If you saw me do pound dollar and you saw me do euro yen, you should be able to you have more than enough information to understand euro dollar. But anyways. Well, I want to do Cape Town this time. Johannesburg was nice. But I'd like to do Cape Town. Mexico City, yeah, I want to go to more, like if I'm in Mexico, I'd like to go to a more historic place. And then, of course, Istanbul is awesome. I already know the hotel room I'm going to rent and all this kind of stuff. I've looked it up before. Ritz-Carlton, Istanbul, here we come. I'm ready. Yeah, so Cape Town, man, we're going to do it. Yeah, you're right, Benjamin. I do care. I do care. All right. So, nada. Seems very quiet to me, right? over that period, totally quiet. This week looks like this. Trying to get it right. Ever so slightly bullish, but having tons of problems. If we are evaluating this on a weekly basis, it was supposed to stay above here if it was a bull, or you're supposed to sell here if you're a bear. We haven't done either of those things. So under current market conditions, there is no gold. La Paz? Must have come. Yeah. No, I've never been to La Paz. It's not the right environment that I want. I don't. Yeah, I want a different Mexico. So the reason I want to go to Puebla, for example, is that's where they do Day of the Dead. That's where mole was invented. They're known for their food. They're known for their culture. They're known for their art. They're known for their traditions. They're known for a lot of things. So I'd love to go to Puebla. Ryan, we're working our way back. So on Monday, we will start the webinar at 8. Although I've had some problems adjusting my life accordingly, but that's what I'm trying to do. I'm tipping. So yesterday we started at 8:30 and not 9. And today we started at 8:15, not 8:30. And if things go well, it'll be 8 o'clock on Monday. Okay. Cool. So anyways, gold is dead, doesn't exist to me. Take a look at WTI. Okay. It had, well, let's do it this way. There was a plan A and plan B for selling. And I can't even force this on the chart properly. So we'll have to do this, maybe this time frame. Doesn't look very good either. Anyways, that's what it's going to be. Plan A was this. And plan B as a bear is this. Okay. And bulls are looking to buy the dip. That's all. Fair market value is 59. So we're at 58.60. So really currently the market is neutral. It comes down to whether you're a bear or not. If you are a bear, this is setting up for you. Right? So for example, you were supposed to short around 58.90. It's 58.60. So where were you? If you're a bear, where were you? Don't let the trades go by, misery. Okay. Where were you? Okay. So if you are a bear and you're on the job, you're probably looking for stuff like this now. Okay. Only if you're a bear. If you're a bull, probably not that good to buy. Don't count pips, Alchemy. It doesn't matter. I find it, since they've added the fractional pricing, I find it confusing too. Because when you trade, you're actually trading at 58.64.3. Okay? But let's do it this way. If you trade a mini lot, you should, like, you can dumb everything down, right, by $1. Okay? And you can say, so you look at your lot size and you translate it into dollars. Is it $1 per pip? Is it 10 cents per pip? Okay? But like when you trade exotics, you know, you could be up 7,522 pips and it's equal to $4. And you're like, I'm up almost 8,000 pips, right? You're like, dude, it's $4. Because it's, what is it, Thai bot? I haven't done that in a while, yen or something. But anyways. Oh, must be Friday. Holy snicker schnucker. Oh. Stock market's opening right now. Ding, 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 ding. Yeah, I don't know when I'm going to be in Turkey. I don't know when we're going to plan it. Not in the summer. I think it might be fun to do something in the fall. Right? You don't want to be in these places during tourist season. Okay, there's crude. What did I miss? Let me know how to help. I'll do this euro dollar for you guys. Sort of the other thing too, when people are like, man, you didn't cover euro dollar. I'm like, dude, I covered it a week ago. I covered it 2 weeks ago. The plan is still the same, right? This is a sell, right? This is a sell. I have it all highlighted out. And next week, this is a sell. Same plan, dude. Same up, right? Down, up, sell, down, up, sell, down, up, sell, down. Until that stops working. It will go forever and ever and ever and ever and ever and ever until that stops working. Right now, the way I'm looking at it is foreigners are buying the U.S. stock market. And by the way, we're approaching 20 times earnings. I think it's 19 times earnings. Imagine you're a small entrepreneur and you're going to buy a company from someone retiring. Okay? You're going to buy their metal roofing shop. And the old man's retiring. He doesn't have any kids to take over. So you're going to buy it. Simple investment banking deal, right? And you're like, okay, sounds good. How much profit do you make every year? And he's like, I bank $100,000 every year with my eyes closed. Cool. So how much do you want for the company? $2 million. Is that expensive? Is that cheap? Is that a good deal? Is it a fair deal? Is it a reasonable deal? What's your thought on that? Peter, metatraders.com. Juarez? I don't know about Juarez. Max is in El Paso. I have friends in El Paso. No deal. Why not? See, the company is worth whatever you're willing to pay for it, right? And this guy's saying he wants 20 years of profits up front. Well, the thing is, Joe, if you buy it, what you're saying is if you manage the business as efficiently as this person who created the business and ran it his whole life, and you pocketed the same amount of profit adjusted for inflation, after 20 years, you'll be at break even. You're like, what? So that's where we are right now in the U.S. stock market. It's about 18 to 19 years, basically, right? And you're like, oh, dude, I'd like to profit sooner than that, right? So that's where we are in the United States. And it's not really the market's fault. The Fed has created this bubble. Cool, fine. But right now, when you look at what's available in the world, there's not a lot of things to do with your money. If you're a large European institution or a large Asian institution, you got big money and you got to deploy the capital. What do you do with it if you have negative interest rates in your country like Japan? What do you do with the money? You invest it overseas. Well, hey, what's the dumbest thing you've ever heard in trading? It's this. Let me show you the logic. Well, this fund in the United States buys stocks. Long only. And last year, they made a 45% profit. We should invest. What's the problem with that logic? Oh, right on, Mohammed. Yeah, we'll have fun. Do you know where the Ritz-Carlton is in Istanbul? That's where I'd want to go to hold the conference. And then we can hit the streets of Istanbul, paint it red. Also, I have a few Turkish friends I haven't seen in many decades, actually, now. I have to call them up and say, what's up, old man? Oh, my gosh. Should have bought you a cane. Some of the coolest people I know are Turkish. They're just like, cool. Like, you're not even faking cool. Like, I know in America, people fake their hippiness. They fake their oh, I only eat organic. I'm like, shut up. But some of the coolest people I've ever met, like, damn, this guy is like legitimately cool. They're Turks. So I got to call these guys up because they're old men now. Anyways, what's the logic here? There's something wrong here. The market's not likely to perform this year the same way as last year. I don't think Apple's going to double again, are they? Maybe, I suppose. But remember, for Apple to double, it had to fall by 30%. No, it does not. It affects Michigan consumer sentiment. Right, Edwards, it's too expensive, right? So anyways, I think dollar strength right now is dumb money, money chasing last year. They're like, oh my God, last year we made 10% profit or 16% profit, but the U.S. stock market was up 30%, but that's just the S&P 500. We heard of some hedge fund that their portfolio made 45%, so we're going to move our money here. Dumb move, dumb. So like I said, Jack Schwager, the guy that wrote Market Wizards, all he did was interview smart traders. He's not a smart trader, but he was an analyst analyzing CTAs. And the number one thing is never invest into a hot CTA, because whatever made them hot last year or the year before is not likely to happen next year and the year after. Okay? So anyways, I don't think the U.S. stock market's going to have, I don't think the S&P 500 is going to go up another 30%. So at some point, okay, Now, typically you see this dollar strength because it's moving to bonds. So like money from overseas would flow to the US bond market. Okay? But nobody wants a 10-year T-note at 1.5%. So what is happening? Well, what the Fed wants you to do is exit bonds and buy stocks. That way, interest rates go up. Okay, so we're in this kind of period here, and the Fed is intentionally creating a bubble. I disagree with the whole process, of course. Edward says, it sounds like if you invest now, you already missed it. Of course, absolutely, 100%. I was begging people to buy the S&P 500 at 8,000. I did a whole webinar on it. And what happened was we went from, I think it was 7,500 on the Dow, and it went up to 9,000. And I said, okay, everybody, wait. But it's going to drop down to 8,000 and you should buy. Okay? That's the only time I've given advice on buying the stock market. No, that's not true. Then there was a time, I think, I'm going to guess, about a year after this, the Spanish stock market was down like, I can't remember what it was, 786 or something. The Spanish stock market was down like 80%. I might be wrong on that. It might be 618, but it was like redonkulously crushed. And I did a webinar on this one too, and I said, okay, great. I understand Spanish companies are a world of hurt. The Spanish banking system is in a total mess, near collapse, all this kind of stuff. I said, what do you think the odds are that every company in Spain falls to a value of 0? And everyone said none. I'm like, well, then buy it. Buy every company in Spain that you think is going to be around 20, 30, 40 years from now. Or just buy the index. That's it. It's a big deal. But 10 years later, should you buy it at an all-time high? That's not how billionaires make money, by the way. How do millionaires become billionaires? They invest in like 12 to 15 year cycles. Does a millionaire become a billionaire because they buy a bunch of stock at 20 times their earnings? No, only a fool would do that. That's stupid. Imagine an apartment building. You go to the apartment building and it's 20 years times your net operating income. You're like, no. You better have some really good reasoning. Well, this is right on Miami Beach. But even then, like, I don't know, man. That's too much. It's just too much. Now, someone might buy it. So like a billionaire Brazilian trying to get money out of Brazil shows up to Miami Beach and pays 20 times net operating income to buy the 30-story building right on the beach. All right, there's other things going on there. They're happy to get their money out of Brazil. So there's some other value there that a local wouldn't have, right? But all things being equal, no one likes to wait 20 years to maybe break even, right? So anyways, there are times when the market tanks. It will tank. It's tanked before, it'll tank again. And they buy it at the bottom. Okay? I had a friend. There was a skyscraper in Poland. It was, I think, like 8 years old. And by skyscraper, I think it was like 50 stories high. Nearly brand new. And the occupancy rate was like pathetic. It had dropped down to 50%. The mortgage was high. And the owner couldn't afford to carry it. The net operating income didn't even pay the mortgage, yet alone the expenses. And there was no credit in Poland. So my friend said, well, I'll buy it from you. And they had to negotiate. Okay? So he said, 7 years, right, times current income. Okay? Would you be interested in something like that? And the guy's like, yeah, that sounds good, because it got him out. So then my buddy calls a bank in a different country. I think it was the UK. And he's like, I got a Class A commercial skyscraper, right? It's only 8 years old, beautiful condition, brand new, 50% occupancy at the moment. But over the course of 10 years, I expect the economy to recover. And this will go closer to 100%. And based on that assumption of going from 50 to 60, 60 to 70, 70, 80, 80 to 90, here's the cash flow statements that it should produce. Here's what it's doing, worst case scenario. And then based, how many years mortgage will you give us? And they said 10. So my buddy bought the building by refinancing it, got the 10-year thing, bought the guy out for 7 years revenue, and put $2 million in his pocket. And nothing happened. It was a phone call. You don't even get keys. He refinanced the building for 10 years. Got keys. Well, it didn't get keys. Right? All over the phone. Transfer of ownership. They got an electronic piece of paper to say my friend now owns it, not them. Put $2 million in his pocket in the actual process because the renters pay the rent. And like 2 or 3 years later, he dumped it and made a couple $1 million more. Because he got 9 years or whatever of revenue, but he just dumped it quick. It was just another quick. He made $4 million on the telephone. The secret is buying low. Now, if he wanted to be a real estate mogul, he would have held on forever, really. So, like, for example, I can buy a skyscraper right now in Hong Kong for a really good deal. Okay? And I bet you, even though they're offering at a good deal, I think we can knock off another 100 million off the price. Probably 300 million off the price. And then you want to own it forever. But you want to buy low and you want to buy when there's blood in the streets, right? So here's the thing. Who is now buying the US stock market at nearly 20 times earnings? Well, there's going to be some foreigners that are buying it for other reasons. Then there's all the idiots. But I'm telling you, the professional, the true professionals, they're not buying it at 20. Like I said, they're rebalancing their portfolios by selling it to the idiots at 20 times earnings. They still might own 5% of their portfolio in Apple, but they've been selling. The number of shares they own has probably dropped by 50%, but they still own 5%, but the value has gone up so much. And they've been selling all those shares to idiots that are willing to pay them $1,000 or more per share. Hey, they only paid 200, right? So anyway, so now they got this extra cash. The smart people are investing internationally. And maybe the opposite's going on. The Europeans are like, well, the smart place to be is in the S&P 500, but I don't think that's true either. So, but anyways, I right now, if that dollar's getting strong and the stock market's going up, I believe that's foreigners. They're not buying bonds, they're buying stocks. So won't it be interesting when things change? And I hope you're there with me when things do change. They will change, and it'll get very, very interesting. Okay? Well, Daniel says, can't wait about the buying the skyscraper things. You have to understand, all he did was talk to the owner on the phone, then pick up the bank phone and call a bank in another country where credit was available and said, hey, I can buy the skyscraper. Check it out. What will you lend me for it? And they check it out. Like this is like minutes. They're looking at it, pull it up. They're like, yeah, well, 10 years NOI. And he's like, how about 7 years NOI? And he's like, yeah, that sounds good. He's like, yeah, that sounds good. 10 years NOI is good. And then they go cha-ching, cha-ching, cha-ching. The lawyers do all the paperwork. Cha-ching, 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 cha-ching. And all of a sudden, couple of $1,000,000 in my friend's account. Because it was leftover. So let's say they bought the loan was for 100M, but he bought it at 98M. And the renters can afford to pay the 100M. So the renters pay the mortgage. My friend owns a building. He's never even seen it, but instantly he's got $2 million in the bank. Done. Plus he can leverage the building. The real asset is now you own a building and now you can pledge that as collateral. They're like, hey, what do you got? He's saying, oh, I got this skyscraper in Krakow. Oh, okay, we'll lend you money. And you just take the thing and now you can use that as leverage. You leverage the thing and now people will lend you more money. So the real money wasn't the $2 million. Now that he owned a skyscraper, the next thing he was trying to buy was a $30 million pound yacht that was worth probably 80 million pounds. Sorry. So, but to get the money, he used the building as collateral. So he had no money down basically to get the yacht. And so like, this is how things move, right? Suddenly people need cash. When the markets are low, you need to have cash. You need to have credit. That's how things work, right? I bought an $80,000 Mercedes for 27 grand because I could pay him in cash. AMG 55 CLK Cabriolet, $80,000 car, 27 grand. That's how you do it. You see? That's how you do it. So in the current home I own, I had made an offer during the financial crisis, and it was like year 3 of the financial crisis. And this house had was empty. They lowered the price, lowered the price, lowered the price, lowered the price. So anyways, I approached them because I was looking at many houses. And I'm like, hey, I'll buy this house for you. Here's my offer. And they're like, absolutely no way. Get the heck out of here. That is rude. That's insulting. Take your offer and shove it. Well, another year goes by, and I actually bought a much bigger, much fancier house. But it apparently was full of mold, so I backed out on that, right? And literally on the 7th day, I backed out on that. And so I go back to the bank because this one was still for sale. And I offered 20% less than I did the year earlier. And they already like cut the price. So I go back in, and the price they were insulted by, I offered 20% less than that. And they're like, yes. Because no one had money. You couldn't even go to a bank and get a mortgage. They're like, oh, well, you can't get a mortgage at that. I'm like, I don't need a mortgage. Okay, you're in. We'll take it. We'll take the money. We'll take it. Done. Like they were like, now, yes. Took them like, I'm not joking, like 7 minutes to respond to my offer. They're like, you're going to buy the house from us? Thank you. Right? Cash. Boom. Credit. Boom. But you buy low. Right? Well, it's not a good job. I'm not trying to, I don't know if I'm coming across right. So let's kind of reset here. There's a proper way to invest. This goes all the way back to this idea like Forex is just logic. Okay? This is just business. That's all it is. This is all just business. Now, there's a lot of like vibrations in the market because not everyone is logic and intelligent and all this kind of stuff, right? So I think many, if not most market participants, they do trade emotionally or with no skill, which is really hard to tell the difference. Maybe there is no difference. But what I see is the markets are really, 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 really slow to set up, and then they're really fast to react. This is much different than when I started 15, 20 years ago. Okay? So now the market is really slow to get it, and then when they got it, it's gone. Like in January, the move happened in about 8 days. And about 3 days later, 60% of the profit's gone. Okay? But it's logic, there's business to this. So like, for example, what will create the next recession in the United States? Well, there's actual logic to measure and then analyze, right? And then prepare for. Like you can prepare for these things. There's a reason why the real estate market crashes. And there is a logical cycle behind it. Okay? And I'd mapped this whole thing out in a paper at Harvard about the real estate cycle and why it happens and, like, why does it happen? Well, it's actually very logical, okay? But there's also the business cycle. There's the political cycle. There's the annual cycle of when farmers plant, when farmers harvest, for example. When do businesses pay taxes? When do people pay taxes? And all this is all very, very logical. And there are proper times to do things and there are improper times to do things. And that's all I'm saying, right? So it's not good to buy at 20 times earnings, but it doesn't mean it will fall. But now it's one of these things where you're like, this could be the beginning of the end. I'm not gonna throw down like it is. I'm not gonna bet against the economy because I've never said that. I've never said bet on a change. But we can be in tune to it. Right? So, under current market conditions, everything's overvalued. I think that's factual. Everything's overvalued. 20 times earning, 19 times earning, 18 times earning, way overvalued. But it's still going to go up until it stops going up. And then you could carry this out, is the real estate market overbought? Is the job market vulnerable to a change? Like, what's a job market with no wage increase? All this kind of stuff. We can say, well, currently the Fed is accommodative. We have full employment, consumers are spending, and corporations are making money. That's why everything's overpriced. However, what's happening is companies are selling products to consumers and they're doing it at a good profit. But the problem is maybe that's phony. Maybe it's being created by this accommodative easing. Like the Fed is making money and credit cheap. So there's no incentive to save and all the reason in the world to spend. Well, under those circumstances, what will happen is that's very good news. But what happens to the medium-sized businesses that are not so profitable as Apple and Google? What about the medium-sized businesses that are making 5 or 6% per year? And what happens one day if inflation does show up and the Fed does start raising interest rates and the cost of their borrowing goes up and up? They very quickly won't be able to, all their money, all their profits will go to be paying for their debt from the growth they had 5 years ago. Well, where's the growth in the future going to come from if they can't, borrow cheaply? If their growth came from borrowing in the past growth, where's the future growth going to be if they can't afford to borrow more and all their profits, or let's say much of their profits, are going just to pay for their old debt? Well, then what happens is they stop investing into research and development or new product ideas, right? So then in 5 years, they got nothing new to market and they can't compete. Well, at that point, then they need to start laying people off. And all of a sudden, and those people get laid off and they can't find a new job because it's happening to lots of companies. And all of a sudden, they stop buying $1,000 Apple AirPod Pros for their kids because they're like, screw that. I got to save my money. Okay? And you see, like, it can happen fairly quickly, actually. So none of this is being predicted right now. But things might change by the end of the year. I think we also can guess on that. Right now, we don't even know a Democratic frontrunner. Now, Grind says Great Depression all over again. No, don't think that way. The way I look at it is what will develop, Grind. So you're misinterpreting what I'm saying. The way I look at it is at some point in the future, let's say over the next 5 years, that's pretty wide, right? There will be a significant decline in the stock market, a significant decline in the real estate market. There'll be a significant decline in spending in general, spending and investing. And I will be a buyer. It's not Great Depression. It's where you make huge money. Okay? Let me remind you, for example, the very few stock. So I told you that you should buy the Dow at 8,000. You should buy the Spanish stock market at whatever it was. But the only individual stock things I have talked about at FX Bootcamp was buying Bank of America at $5. I gave a very clear reasoning. I think I dedicated about a half an hour to it. And then I actually bought it. I think I did something similar to Delta Airlines, about $5 again. Okay. I bought Apple computers at $6 a share. Okay. So there are times to be ready, willing, and able. And everyone else is just the herd. Okay? That's all. So there are things to analyze if you're going to be an investor in the foreign exchange market. There are things to analyze if you're going to be in the stock market. And there are options, right? There are things to analyze when you're in the real estate market. Okay? So, are you willing to pay 20 times earnings? I'm not. Doesn't mean it's the wrong move to pay 20 times earnings. Maybe Apple doubles again. I don't know. I don't know the future. Okay? But you have to have your line in the sand. You have to do your work and stop saying things like, oh, we're going to go back to the Great Depression. Oh, the dollar's going to be worth zero. And no. We need to, the way you write, the way you speak, it influences the way you think. Okay? So it's more like, at what price do you buy? What price is valuable? If Apple dropped by 30%, will you buy it? Well, this was advice I gave you guys a year ago. I said, create a list. If the stock market dropped 10% and then another 10% and then another 10%, what stocks are you going to buy? Another stock during the financial crisis I talked to my wife about, I remember we were driving through Starbucks through the drive-thru, and we're ordering our lattes, and this is like, people are in soup kitchens, right, in America. Like, this is at the bottom. And this value of Starbucks dropped by, I don't know, 50%, 40, 50%. I said to my wife, we're grabbing our like $20 of coffee, which is just crazy back when everyone's dying, right? And I take a sip and I'm like, do you think Starbucks is going to be around in 25 years? Or do you think it's about to go out of business? She's like, no, I think it'll be around in 25 years. And I said, yeah, me too. We should buy it. Okay? Not that complicated. What about the analysis you have to do now? Do you buy Starbucks at $380 a share? Do you buy Apple at $1,200 a share? Really? I'm an old venture capitalist. I liked it at 80 cents. I liked it at 80 cents, not 1,200, right? So anyways, like, I'm just challenging you to just think bigger. Don't think good and bad. Just think, what's your price? What's your reasoning? How much are you willing to pay for something? So like, you know, with my finance degree from Harvard, not my economics degree, but in my finance degree, I can analyze a company and I can tell you what a reasonable price is, but it's really meaningless. Because it's whatever the buyer wants to pay, whatever they're willing to pay. I can say, oh, dude, you're paying way too much. And they're like, we don't care. We're just buying this. I'm like, okay. Yeah, Javier's like, it's a Peter Lynch thing. No, well, not really. Like, what I was teaching people at FX Bootcamp back then was not that a company that you know or frequent, but a company you believe will be around in 25 years. Because companies were going out of business left and right, banks were going out of business left and right, you know, people were out, 10% unemployment in the United States, houses had dropped by 50%. It was the end of the world as everyone knew it. So my basic question was, what's going to be around in 25 to 50 years? Will Bank of America be around? So I did a whole video on this, guys. Bank of America is worth $5 a share. And banks have been bailed out before, recently. I'm like, hey, how many people think here believe that the value of Bank of America is going to go to zero? And as it approaches zero, the government of America will let Bank of America fail. How many people believe this? And then everyone I did the webinar said, well, zero. There's no way that that's going to happen. There's no way the American government will let Bank of America go out of business. Okay, cool. So it's $5 a share. At what point do they get bailed out by the US government? $2 a share? Well, then I'm only risking $3. I'm not even risking the full $5. At some point, if this goes to zero, it will be saved. Cool. So I'm not even risking $5. So, right? So I pick up the phone, I call my wealth manager, and I'm like, buy it. True story. Hey, I made money on it. Held it for years. Okay? But that's the secret, I think. But see, you have to understand, I'm not right or wrong. This is how I trade Forex. Macro. Okay? I didn't like the management team at Bank of America. Right? I didn't like I didn't analyze their potential future earnings. I didn't even like the economic environment in which Bank of America was in. People were losing money, not necessarily adding deposits. Nobody was trading, right? And interest rates were like zero. Like it was a bad time to buy Bank of America. But I'm looking at macro, like it wasn't Bank of America versus JP Morgan or something. It was just like, I believe that I could buy Bank of America and give the stock to my children when they graduate from Harvard. There you go. You know what? That was probably within the same week or two that I bought. So I don't remember the actual price I paid. It might have been less than $5, but I knew I brought it up at FX Bootcamp because it was $5. And I explained like that it can't go to zero. So now I have limited downside risk. I basically have a built-in put option. But I have unlimited upside. If Bank of America is going to be around for 50 years, well, shoot, I'll just give it to my kids. Okay? But I'm trying to share that I think in a macro way when it comes to Forex, the global economy, right? And I even the stock market and the price of wheat and the price of oil and the price of gold, these are all macro questions. And, investing into companies or whether you should buy a company and stuff, there's more of a micro thing where I say price is everything. I have my theory, but I confirm or deny everything by price. So I might want to buy a company, but I'll say, but not at that price. That's a good company? Great. The management team's awesome? Great. Future prospect for cash flows? Good. Fantastic. So should I buy it? No, not at that price. Okay, you see what I mean? So to me, price matters. So if we're going to buy real estate together one day, that's going to be an important part. But I might go 9 years without even looking at real estate. And then 1 year, we should be buying like crazy. Define Europe. Terrible week, hasn't it? Why is that? To me, it's been a benign week. Oh, I mean, it makes sense because we're in the flip zone. But look, I've already predicted all this stuff for you guys, 3 weeks ago, right? You should be on all these yen pairs. Down, 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 down. I mean, so you should already know that. So it's not, we're already on next week, is what I'm trying to say, Lo. So you're like, God, terrible week because of low, not much volatility. Well, the way I've been looking at it, the way I set it up, is it's been going up to my sell zone. So I don't know if I look at it as low volatility. I looked at it as setting up, I suppose. Okay. And now it's really great this morning to see down, 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 down. And basically I could say, hey, well, told you so. Oh, yeah, Prague. I haven't been to Prague in a long time. Yeah, Prague is cool. I haven't been to Prague since the 90s, though. It's probably changed a lot, huh? Mr. Heibold says he's from Belgium. I have friends that I'd love to visit in Belgium, and I'd like to visit some friends in Holland. So that's really close. I would like to visit some World War II sites, right? The Ardennes, for example. Go to the Bulge. So yeah, I'd love to Belgium. I know someone who's a lieutenant colonel in the American military, never wore a uniform, never fired his weapon. He spent spent like 2 decades managing nuclear engineers that basically, managed the missiles that were all along. And anyways, he lived on the French-Belgian border. He said every day a little Frenchman would come on his bicycle, replace the empty wine bottles with full ones, and drive away. And I'm like, that was your military experience? He's like, yeah, for like 25 years. I'm like, for 25 years? That was your life? He's like, we weren't allowed to wear uniforms. I had to wear civilian clothes. I'm like, oh my God. And I'm like, how long have you retired? He's like, well, I retired when I was 45 with a $2 million pension. I'm like, you're kidding me. Like, that's the best army story ever. Is that right, Mr. Highvolt? So anyways, yeah, Amsterdam and some other places there. But again, I have a lot of Dutch friends I'd like to visit. I have some Belgian friends I'd like to visit. A friend of mine, and this is true too, a friend of mine bought a castle in Belgium and now lives in it. So I'm like, I'd like to go see my friend's castle. Anyways. All right, so I've gone on for hours and hours and hours. So hopefully it was somewhat entertaining. Sort of a Friday. I'm just kind of lulled out, tired out. Kind of just need to sit and read, get some sun on my face. I do have very nice friends. I just never see them. I have other friends that they moved to the south of France, and they live in the south of France. I mean, like they're 42. Like I have so many friends that are just done. They're early 40s and they're done, and they've been done a while. It's amazing. I'm not quite there yet. I still like what I do, so I'm not looking to retire. But they're done, like just done. If you gave them $1 million, it wouldn't mean anything to them. Like that's done. And these are guys, we were all just kids in college, all hanging out, loving life, living large, dreaming about changing the world, making it a better place. And so many of them are now 40 and they're done. Like, can't make any more money. You're like, wow, good for you. Yeah, Mr. Highvolt says, yeah, castles are relatively cheap, but they're hard. They're expensive. They're like a Lamborghini, right? You're like, oh, what a great deal. I got it for only $400,000, and then you're like spending $100,000 a year maintaining it, and you never get to drive it because it's always in the shop. Anyways, so anyway, have a wonderful weekend. Please do that. I wish you the best. I hope you're on all these yen pairs. I hope they break through. We don't know if they're going to break through, but you were prepared for it well in advance. So hopefully that's coming together. The third wave of the January pattern, so to speak. I hope I answered your questions and all that kind of stuff. If you did enjoy this webinar, make sure you thank our host, tradersway.com. Oh, you want to see an exotics? I guess so. There's so much more. There's so much going on more than this on, right? So I'm waiting for, well, let's just do it this way. Does this say down? No. Okay. But as we move to a potential risk on, so right now we might be in a risk off move, and that's reflected by the euro lira up, but things may change as in, let's say, Fed meeting comes out and they say, we're never going to adjust interest rates. We're going to keep them low forever. We're not going to lower them, but we're never going to raise them. If they say something like that, then the stock market's going to rally. Dow's going to go to 30,000 and euro lira drops. Okay, that's my thought. Opportunity to get back in. I try not to trade this time of day. Okay, I'm an Asia fade guy. Okay. Okay. And so if you traded this last night, you're already BE and it didn't work for you. That's all. Okay. So that's that. So let's do it this way. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend. Huh? Call up someone you haven't talked to in a long time. Make their life a better place. Review your charts. Review your strategies. Do your business planning. Okay? The weekends are for you to sharpen your saw, not find false dopamine sources like drugs and alcohol, for example. With that being said, I'm going to go drink some wine and smoke some cigars. Anyways, take care, guys.